Good afternoon, everybody. Welcome to the Aftermarket Monday session. Let's take a look and see what the market's setting itself up for. Got a big surge this morning today to the upside. I'm Dennis Wilburn with the Active Trend Traders. Remember that all materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance does not guarantee future performance. As I said, this Saturday I will be at the Masonic Temple over in San Jose. So those of you who are in the Bay Area, I hope you can come by and check it out. So we're going to be talking about something very important. We're going to be talking about how to eliminate and or manage fear from your trading. Went through a really great presentation, and I'm basically taking part of that. Great psychological aspect on it. Objective of Aftermarket Mondays is to provide timely, actionable intel at the beginning of each week, and then do a quick market review. And right now, the market has made its decision. It is moving higher. Now, how much higher is it going to move? We shall see. And we'll take a look at the stocks and ETFs that are setting up. I'm interested in a couple of them. Right now, things are a little bit out of kilter. We're up nicely for the year, as you can see. Nasdaq Composite, really, kicking it in gear. S&P, Dow up, about 3%. Russell still down from last year's high, but it is back in the green figures, so good for them. Let's take a look at a couple of the. I'm going to take a look at just the indexes first. There we go. And I'm just going to take a look at the SPYs, not the ETFs. As you can see, look at this move higher. We get that I talked about this in yesterday's Art and Science of Active Trend Trading, where we're in this little scrunched up zone. You call this a bull flag if you wanted to, just a horizontal pennant. It has bounced out of that now. Where's it going from here? Well, it's most likely going to go up here and reach this other level of overhead supply where selling came in previously. It's because it sold off here, so it's kind of in that supply zone. So would it be surprised to see us fall back down? Not really, but this move up since, when was it? The 9th of Feb has been a nice little steady move up. But as you can see, high volume at the first part. Yeah, volume's kind of dwindling off, and it's going to come to its Waterloo right around here. Will it go higher, or will that be the high for the time being, and it's going to do another pullback? It would be kind of interesting from a trading perspective if both the S&P, the Nasdaq, the Russell, if it just worked in this range all year long, just a very kind of volatile type range, but just moved sideways throughout the year, that would give us some excellent trading opportunities and learning opportunities. But overall, the market wouldn't be moving that much. So as we said, TSI weekly chart starting to tick back up as of today. But as you can see, it's already extended a long way away from its moving averages. And so I can see it pushing all the way back up into this zone here, which is looking at interesting. This zone that was identified from these little candlesticks over here, right in the middle of that weekly big sell-off candle. Big sell-off candle. So that's a strong level of support, resistance, and or as some people call it, overhead supply. I'll look for prices to push its way up into that. I'm not going to be a buyer of the S&P until we pull back into the 820 combo. We had an opportunity on Thursday last week, and we get and we got a really nice rebound. Let's look at QQQ. QQQ is now pushed out of this zone, so we can actually eliminate that zone. Remove that drawing. So that's gone. Now it could in fact, buying came in. So these big green candles, they show hey, buyers came in. Were demanding the entity and driving it higher. If it gets back above this level, the 171 level, then that could be a new level of support at which we would, be a buyer of the Qs again when it came back and retested that level. I'm going to show you a couple of entities that look kind of interesting for that perspective that you may want to take a look at. Let's see what else we got here. Russell IWM. Still kind of, bringing up the tail end of the of what's going on with the markets. The Russell partly has due to the interest rate issues and inflation. As we know, the small cap stocks do not do as well in that kind of environment, but it is starting to move back up. So just keep your eye on it. We're approaching a overhead supply zone, so it could turn down from that, but it's getting the daily moving averages in gear back to the upside. So if the 8 pops above the 20, pops above the 50, that could say, hey, we're off to the races, at least back up to the 160 level. Watch for any kind of pullback back into that combination, that 8, 50, 20 combo right there. Very, very strong level of supply and or support. So keep your eye on that one. Let's go back over here. I'm going to share a couple of ideas with you that may enable you to tweak your preparation. Let's run through what we're doing for the 25th. Okay, we can focus on the ETFs. Again, they're pullbacks into the moving averages is the idea. I like gold. Oil is already extended. Biotech's financial. I really like gold. If the other indexes or the indices are moving away and just really rapidly heading out, gold, both the inverse and the leverage inverse and the leverage directional might be a good place to kind of park some cash. Core stocks, Tesla, BABA, NVDA, Netflix, YY. We're in a YY trade right now. And bonus trades that I'll be providing to folks when they get set up are on the gold miners. Nothing set up right now. The YY trade that we are doing, earnings next Monday. Now, if you are looking, if you are a premium member, it's too late to get into this trade because, as we covered, I covered a couple of weeks ago, you need somewhere between 3 to 4 weeks in it to make these earnings trades work for us. So, what have we done with this so far? Well, we got in to this straddle, picked up the 18 May 130 straddle. And we only did one contract each side, and a straddle is a call and a put at the same strike price. Paid $27.60 for that. We anticipated that through time decay, we would lose about 15% of the value. And as of today, the price on these, on this straddle is down to $26.15. So I lost, so far $145. 15% was, I think it's about $178, $179, $180. So, but what have I been doing to offset the time decay? Well, I've been selling weekly premium against it. I sold the weekly 23 February 136 call. We cleared $140 on that. Basically, so the trade itself is basically break even right now. Then I sold the 2 March 142 call for $1.40, so it has a potential to gain 140, and then I followed that up with a 2 March 128 put at 95 cents, which would give me about $95 if it expired worthless. Now, of course, I will close those out before Friday, and for some percentage, like if I can get if I can close it out with a profit of $110 on my call and let's say a profit of $75 on my put, I'll be good with that. But as you can see, if the value of my straddle continues to hang right there about 26, or even it goes down a little bit more, selling the weekly premiums against it is in fact covering the price, the time decay. And then the expectations, what we'll do is next week on Monday, I will sell a weekly strangle on Monday to take advantage. That will be next week's options. I will take advantage of the exploded implied volatility that always tends to happen at earnings, and I will go way outside the money on it. And our anticipation is if YY, which occasionally it runs really hard with earnings, if it does do a real hard run, and it gives us 3 to 4 days to trade this over, 3 to 4 to 5 days after earnings, I want to close the total position, this position up here. And oftentimes, if we get a really great earnings report or a really crummy earnings report and it falls out of the sky and heads down really hard, this straddle could go up to, our objective is to try to make 100% on this straddle. So in other words, to earn back this 2760. That's the objective. But even on the ones where that didn't happen, covering here with the weekly premiums and the premiums the week of earnings, basically resulted in it getting out with a small gain or very little loss. So let's see, gold seasonality. We talked about that before. Gold seasonality. We are here in the end of February. What tends to happen with gold is it tends to, as you can see, both the 15-year pattern, 40-year pattern from 1st of March tends to fall on back down a little bit and then rebound middle of March up a little bit and then just kind of ricochet, ping pong its way into the June-July time frame. But look what happens in the June-July time frame. That's when gold tends to bottom and then shoot up. So we will anticipate there. Here's JNUG, excuse me, and this is last year's aspect. And I want to hone in here on here's July, and if you'll see, it went from $15 up to $25, a $10 move during that, July to the August-September timeframe. That's typically a big move for JNUG. JNUG also, you can see that's 57, 56, 62, and 61. Nice returns, in very, short periods of time. Just trading the regular active trend trading triggers. And if we would have captured just half of the move on each one of those, $1,000 to invest would have been up to $28.11 by capturing one half of the moves for a gain of about 281%. The other side of that is when it's not trending to the upside, it's trending to the downside. And JDust is the inverse 3-time leverage on the junior miners, and it even actually has some better returns. Again, 26 days, 102%, 22 days, 107. Again, just picking up one half of the move, $1,000 would have gained, to a little bit over $3,000. And so if you are what do you call it? You're trying to trade options because you're trying to your account's not very, not a very large account. You're trying to take advantage of leverage and all that kind of stuff. Take a look at these. Eric, you still on the line with us? Yeah, you are. Eric, you've been trading both directions with JDust and JNUG, yes? And and you're pretty pleased with the results that you've been getting, taking the signals and exiting in a timely manner? That's a question. Loving it. Okay, following TSI. Excellent. Okay. Awesome. But like I said, guys, this again, it's not a tip. Just lay out the chart on a 12-month worth of data. look for the strong levels of support and all this kind of stuff, and look for what the TSI is telling you. And of course, Eric, what time frame are you trading the juniors on? He's trading them on, since they're juniors, David, he's trading them on nap time. Daily. So, okay. So what's going on with, correctional expectation, correction or pullback, indecision. That's where we're getting kind of last week. We're starting to see that indecision is working out to the upside. So it still has a hurdle. All the indexes have a hurdle to jump over coming up here. And so remember, active trend trading system, 4 entry rules, 6 exit rules. Pretty, that's pretty straightforward. Very pleased. January, we did average about $500 a week on our January. And those for people who are, well, I'm working on something with my wife. My wife is learning how to trade futures. Futures may, if you are looking to how to generate some weekly income, futures may be something you want to take a look at. And what's really awesome is you can apply the same active trend trading rules to trading futures as just trading something regular. Has some very interesting margin requirements and all this type of stuff. But it can allow people to be active in the market and try to. The answer to that is yes, David. David asked the question: is what strategy do you use, intraday or or the daily? She's doing well right now. She's in the learning mode, and as I'm learning with her. It's a combination of both looking at set the position up, let it trigger itself, and then whatever happens, happens. We're not trying to scalp or anything like that. If that's where you're asking the question about. So, okay, let's see. If you are not an active trend trader member, I encourage you to join us and become an active trend trader member, even if it's just for the free newsletter, because we do have bonus trades, about 10 to 12 per year. That's about 1 per month that we provide to members who are both the premium members. Of course, the premium members are going to get more trades and all kind of stuff and text alerts and this type of thing. But today in Hawaii does not look like this. It looks like we're in Seattle today, just to let you know. Let's go back and take a look at a couple of stock charts on some entities that you may find interesting. Let me go click. Okay. First, okay, here's some things that are happening right now as we speak. Look at this, Tesla. What's Tesla doing? Well, as you can see, Tesla is back up at resistance at the 359, 360 level. Is it going to reverse? Right now, TSI is pushing higher. Same thing on a weekly chart, pushing higher. On a monthly chart, which is almost over, be over on Wednesday of this week, actually we're putting in a hanging man on Tesla. But if Tesla breaks out here, we're probably going to go up here and retest the old lows or old highs. And so definitely something to keep your eye on. And we'll also start looking at 5.2. Yeah, we're not ready for anything with Tesla on the earnings. That's one. And then Baba. There we go. Everything's doing about the same thing that the markets are doing. As you can see, they're coming out there. They went down. bounce with a nice hammer, and then they're starting to push their way back up. They're getting up into the zones where it sold off before. So how many sellers are still up here? This was a significant sell-off. How many sellers are still up there waiting to jump on the unsuspected? Right now, we don't know. Take a look at, here's a stock that has in fact broken out. This is our buddy Netflix. What is it broken out from? It's broken out the 286.79 level. I would go to an intraday chart. Right now it's starting to push its way on up. Now, we have to be aware that what this is showing us right now, of course, is okay, where's my drawing tools? Okay, I'll have to show you. Oh shoot, it's not letting me. There we go. There's my drawing tools. Let's keep a real quick eye on this. Is as we push on up, we've got negative divergence going on here as Netflix pushes on to new highs. The TSI is not doing that. We have the market forecast looking like it's going to put in a three-line cluster here. It's really close to that. That's typically a topping signal. So if this turns out to be a fake out, we would expect this price action maybe move a little bit higher, but then come bursting back down through the 286 level. But since we don't know that's what it's going to be, we have to treat the 286 level as a level of support where we would potentially be buying. That is the functionality of how it works. A couple of other ones that NVDA again right up there. Really a lot of indecision. What's it going to do? Now, if it breaks out of this level between the 240 and 250 level, then 260 is definitely in order, and you could actually take it up, probably add another 45 points on top of that. And I'm going to throw out a couple that just hit my eye off of. Yeah. Okay. First Solar, interesting little pattern over here, bouncing off the 100-day moving average. Pretty good, big sell-off, but then a pretty good above average volume today. It may be, just kind of moving back up. But just draw a line across here. This rated high on the watch list that we were looking at over the weekend. And then another one, and this would be one that we would definitely look at wanting to add and put into the portfolio building type. But it's been, we have to look at it and say, okay, with all the big movements in the market, TD Ameritrade did fairly well. Yeah, it drops down here, but then pops back up, and it's starting to move higher again. TSI tick up, yes, on Friday, follow through day to day with a little bit of increased volume. So, certainly something to look at. We know we have some overhead supply over here at around the 58 level down to, but we've got this nice little trend ticking up off the moving average on the weekly chart. So with that, yeah, those are the ones I wanted to highlight for everybody. I hope that you can see that. And the last thing I will leave you with is this. I was doing some study on Ed Seykota. Those of you know, Ed was is a very successful money manager, one of the most successful in the last 40 years. And I was reading some of his principles and guides. And it's kind of interesting how rules and guides that successful traders use tend to be repeated. And so this is one that just really caught my eye. It says number 4, Ed did not watch the price action all day. He set buy orders if prices got to certain levels and set stop losses and let the market hit those levels. And of course, he had his price, his profit targets already set. And so, what does this say? He goes on to say, having a quote machine is like having a slot machine at your desk. You end up feeding it all day long. I get my price data after the close each day. So basically, what Ed's doing, and Mike and I talked about this earlier, he's basically taking a look at this picture, this chart of TD Ameritrade. He's going to say, okay, I want to buy TD Ameritrade, but I want it to buy it at $95, not where it's at right now. And so I think it'll come back and retest this level, or I want to buy it at the moving average, 55.87, or just slightly above it at 56. Therefore, I'm going to place my order now. My stop loss is down here at just below 54.53. And he sets that in well ahead of time because and that way he's ready to go with the order. And while that's what I try to do with the active trend trading system, I need to practice that more often. That way it gets things into people's hands earlier on. And so just something to be thinking about, just looking for it, because the clues are there. I mean, look at these clues on a weekly chart. We know that what? At around $55, that's where buyers came in. Is it what's keeping us from placing an order to buy some shares at $55? I'll leave that question with you. Hey, we'll be back on Wednesday evening for some really good trading. We'll finish up with the we will have a excuse me. I was reading a note here. I was distracted. On strategy number 3, we will finish up what we were talking about last Wednesday, and then next week there will be, on Friday this week there will be no session because I'll be in an airplane heading to California, and then I'll be broadcasting from Boise, Idaho next week. And again, if you are in the San Francisco Bay Area or San Jose area, we will have a awesome Bay Area Moneymaker meeting at the San Jose Masonic at 9 a.m. on Saturday morning. So if you can come out to that, please come out. We're going to be talking about eliminating or managing your fear as a trader. So a couple of last questions. Eric, are the IBD 50 stocks breaking out of their bases? I would say that there are several that are. I haven't taken a look at each one of the IBD 50s today, but it would not surprise me if they are. At least they're getting close. Jim didn't see an alert to sell the 32 YY128 put. Yeah, Jim. Right now on this particular thing that I'm doing is I'm basically just trying to demonstrate it to folks. And when we get into next earnings seasons, I'll be basically sending those out, and so I'm sending some out, but I'm kind of trying to set it up as just watch this one and see how it unfolds. Okay, guys. Okay, with that, have a great rest of your Monday. God bless everybody. Aloha.